Welcome to the STR Data Lab.
Hello and welcome to the STR Data Lab. I'm Jamie Lane, Chief Economist at AirDNA, and I'm joined today by a frequent guest. We've got Bram Gallagher, Director of Economics and Forecasting at AirDNA. Bram, welcome back to the show.
Thanks for having me. Always a pleasure.
So Bram, it's been a little while since you've been on. Since then, we have a new president. We've seen sort of record gains in the stock market. We saw a little bit of losses recently. We've seen pretty significant changes in consumer sentiment. We still see very positive numbers in most of the metrics I know you and I track, but there has been a lot of uncertainty. I think introduced and talking to most economists, the chance of recession has gone up pretty significantly in the past month. So I thought it would be a great time for us to chat on what are the risks that are out there. How have you sort of thought about changes to our outlook for the industry, given all this uncertainty that's out there, and sort of give people the facts on what we're seeing, what we're hearing, and how they should be reacting as sort of lodging operators. What do you think?
Sure. Yeah, no, that sounds like a perfect and topical subject to look at. But, I think uncertainty is probably the most important word, because the fundamentals, as far as the unemployment rate and industrial production, as far as, sort of GDP growth, things are still looking all right. Like we've got a very, strong economy right now with no particular weak spots, but we've seen a lot of talk about, wide-ranging policies, some of which have taken effect as far as those tariffs go. And this is starting to at least weigh psychologically on people. I think this is going to translate into, behavioral changes. So, for instance, Tuesday, the Conference Board updated their consumer confidence index, and it did take yet another pretty big tumble, is what they describe it as, 7.2 points. So it is now well below that 100 sort of baseline, right around 93. People are getting less confident about the future.
And one of the series I follow really closely and have been for years comes from policyuncertainty.com, their sort of economic policy uncertainty index.
Oh, right.
And I don't think we've talked about it in a while because there hasn't been a lot to talk about. And that index over the past year or so has really been low and ticking around 130, 140. And then in this past month, it's sort of ticked up over 300. And it's sort of really the highest level it's been since the onset of COVID. And when you go back and really when the series started back in the 80s through to COVID, it's higher than it's really been. So what's driving, one, the sort of decrease in consumer sentiment and the increase in uncertainty out there? What is it that you're hearing? What is it that consumers are sort of worried about?
That's great. It's a great point. And you can correct me if I'm wrong, but that uncertainty index, it's created by academics, and it sort of scans newspaper and other sort of news articles.
Yeah, that's a big piece of it. Is how much are people talking about uncertainty? How much news articles are about it? What is just the sentiment around uncertainty? And definitely sort of has ticked up.
Sure. Well, I think, one of the things is, I guess, Elon Musk's kind of he's in charge of the Doge initiative by the Trump administration. I think one of his mottos was, move fast and break things. And I think, with the Republican Congress, with a very sympathetic Supreme Court, and with the Trump administration in place right now, they have been able to move very, very quickly on a number of pretty dramatic policy proposals. So I think that's part of the uncertainty, is when you start making big moves, that people are going to, they're going to be concerned about it. Where things are changing pretty quickly. So the things that I'm thinking about in particular would be the introduction of tariffs.
So be Before we go into tariffs, I want to sort of dig in a little bit more on Doge and sort of the impact on government spending, impact on sort of jobs there. So the sort of factor that you see impacting, and there's quite a number of government employees now that their jobs at risk, right? And those people spend. And when we were sort of discussing at the beginning of the year, the outlook, there was this view that there's certain types of markets that are more exposed to government spending, government employees. When I was at the Hunter Hotel conference a couple weeks ago, our friend Mark Lamano from Calorie Labs was presenting, and he had this great slide on amount of sort of travel that's sort of done by government employees, sort of booked through government discounts. And he showed that last year, 4% of overall travel was sort of directly from government employees. And I suspect there's a whole lot of indirect travel related to government spending as well, government employees from consultants and the like. And what really scared me, and as he was talking, was they had Ford data, and essentially they're showing that Ford demand for government spend for lodging was down 80% over the next 30 days, which is pretty significant. And then he also showed that corporate spend, so people traveling using sort of corporate discounts, was down like 45%. And when you look at corporate, it's about, I think, 13% of overall demand. So add that to government, you've got like 17% of potential lodging spend is down like 60 something percent in aggregate, which if that comes to fruition, like that could have really big impacts for both hotels and short-term rentals in the near term. And one, yes, it could be flowing through into concern around the economy. Do you think that's something that we should really be worried about as we think about the outlook now for 2025?
Well, yes, in a variety of ways. I think one, that you've got, some people losing their jobs, and as you say, people afraid of perhaps losing their jobs or job uncertainty. And, that's certainly with federal employees, which are a significant, but not like the largest, maybe chunk of people traveling around. But still, I think whenever you see sort of mass layoffs, people get nervous in general. And I think that the first thing that people do when they get nervous is to try to hold back on expenditure, try to save a little bit. So I think that is a pretty big concern. Business travel in particular. So if there's any sort of silver lining to that, short-term rentals are, much more focused on leisure travel at the very least. And I know Mark is very focused on the hotel, but if you've got a lot of hotel vacancies as well, they might start slashing prices, which could be difficult for short-term rental operators as well.
Yeah, no, absolutely.
Another thing about travel, I don't know how much of an effect that this has got, but I remember at the beginning of the year as well, when we first started with a lot of these cuts, there was a lot of high profile news stories about terrible plane wrecks, like planes flipping around in Toronto. So I don't know if that's going to have any sort of material effect, but I know I wasn't thrilled about the prospect of a lot of travel either.
And that's maybe another sort of interesting point, is at the beginning of the month, we did hear from sort of the airline companies that they're warning of a travel slowdown. United Airlines sort of commented that they were seeing government-related bookings down 50%, though for the airlines, government was only about 2% of their business, so about half that is hotels. But the fact that they were seeing it down 50%, that could be and just another data point. They've also seen United Airlines sort of spoke about some bleeding over of that weakness into the domestic leisure market, where international and sort of premium demand has actually been relatively strong. Delta called out that they were seeing some weakening consumer sentiment, especially on the lower end the income spectrum for travelers and seeing signs of consumer price sensitivity. Definitely showing up. And in my mind, if the airline industry is talking about that in early March, like typically in my head, at least, like what I think about is people book their flights first, then they book their lodging, then they book the sort of experiences that they're going to be doing. So airlines can really be the first sort of canary in the coal line in terms of changes in travel behavior. And the fact that airlines started to warn in early March means that we could start to see it in the booking behavior throughout March into April. And then that could lead to a declining demand potentially as we get into summer travel season. Any sort of comments there?
Yeah, and you bring up an interesting point too about sort of the different effects, and that's another, I think, strong trend that I've seen with a lot of this sort of uncertainty is the bifurcation of the markets and the different effects that we're going to have. So we've seen a lot of, in fact, if we go back to this conference board, so consumer confidence took a big plunge, but the one segment that didn't have any sort of reduction in confidence was household earning $125,000 and more. So there's still, I think, there a lot of these effects, I think, are having a disparate impact on sort of lower income people, whether it's the prospect of higher inflation, whether it is sort of job insecurity, anything that sort of affects, the consumption, I guess, is going to disparately affect lower income folks. So there's that segment that I think is bearing a lot of the brunt of this. The higher income folks still doing pretty well and still, being able to make plans. So you've got, I think, some different factors going on there. So, and then when we're looking at those higher income folks, they're maintaining strength right now. However, we did have an equities shock, I think, and if something like that, or we had a dramatic one-day reduction in stock prices, and that's really something that could scare the sort of the upper income folks or high wealth folks disproportionately as well. So we haven't seen that confidence get shaken yet, but we've also seen some weakness in that particular segment as well. But no, I like the idea that air travel is sort of a leading indicator for the summer travel season. And if you're right, if airlines are talking about weakness, that could signal later travel weakness. The strength of the drive-to market maybe might help a little bit with that, since they're not taking plane rides. Energy costs have not gone up a whole lot, and that's helped out airfares as well. So it's the one sort of bright spot in inflation this last month. But I guess it hasn't done the trick of attracting more passengers.
Yeah, and you talked about the sort of drop in the stock market and its ability to impact sort of consumer spending. That impact, and at least how I understand it, and correct me if I'm wrong, is sort of the function there is what some economists call the wealth effect. So when the stock market is up, even while you might not be selling any stocks and generating cash, and the general consumer sort of feels wealthier. You see your bank account going up. But roughly half of Americans do own some stock. And if you feel wealthier, you might be more likely to book that vacation. You might be more likely to take a longer trip, stay at a nicer place. And when the stock market comes down, you do see, and there's historic evidence of it, of people sort of pulling back on spending because they feel maybe a little bit less wealthier, start to look for discounts, start to look for ways to save money, even though they still have their job, they still have the same monthly sort of take-home income. There's not a direct sort of impact on their earnings, but they just feel a little bit less wealthy. Is that correct?
Right. Yeah, exactly. So, we've moved away in the U.S. largely from sort of defined benefit pensions to 401ks and other kind of, equities-based retirement plans. So, yeah, a lot of people do have these. It's a lot easier these days to keep track of the value of your portfolio too. So, when I was growing up, you'd have the newspaper and you'd have to check the price of the stocks and multiply it in your head. But nowadays you just log on, you can see exactly how much money you've lost. since the beginning of the year. So very wealthy people too, they pay very, very close attention because that's where almost all of their wealth is in the stock market when you get to those upper tiers. So volatility in the stock market is going to add uncertainty there. They're going to start deferring plans, whether that's travel plans or, any kind of plans. It could be a investment as well too. So yeah, that can have a pretty significant impact. I was watching, Mark Zandi and the Moody's crew sort of look over the economy the other day, and he sort of mentioned that the higher income consumer is very, very important to the economy because of the disproportionate amount of spending that they do. So I think that right now the equities, they're not in the worst spot. We haven't seen, a whole lot of talk about an actual correction. We got pretty close. But we've sort of been able to increase stock prices from them. But if we have, some increasing fears about whether interest rates might be higher for longer, whether it is tariffs are going to inflict economic damage, we could see slides, and that could definitely affect sentiment.
So maybe let's now jump over to tariffs, as that I think is one of the other big worries. There was, I think, broad sentiment that tariffs were sort of a starting piece of a negotiation, but that the administration would quickly sort of pull back from the rhetoric and that we wouldn't actually see 25% tariffs go into effect. There'd be large carve-outs, but we have now actually seen tariffs go into effect. We're maybe beginning to see the impact of tariffs on rising prices, on inflation. So can you help us understand sort of what the trigger or the impact is from tariffs on how it would sort of make its way into the lodging sector?
Sure. And I think this adds a lot to the uncertainty too. So the uncertainty index, as you said, is really, really spiked. And that might be because we expected tariffs going into this administration, but we expected that they were going to roll out maybe in 26. And then as soon as Trump takes office, we're into tariffs right now. So that kind of switched our opinion. And then we put the tariffs off for a month. So, we weren't exactly sure what was going on. And then the tariffs actually did take effect, as you said, in March, broad-based tariffs in Canada, Mexico, and China, as well as specific tariffs on import of metals, so aluminum and steel. Now we're getting into full-blown sort of trade war territory with retaliatory tariffs from Canada. New announcements from the EU that if vehicle tariffs go into effect as they're planned to in April, that they'll be increasing retaliatory tariffs. Canadians have sort of, they've talked about sort of boycotting, I guess, the U.S. for tourism. We don't have a lot of evidence just yet if that's really taking effect, but there has been some talk about that. And in addition to that, of course, the U.S. dollar has appreciated versus various international currencies. So I think there's a lot of different effects that can happen from tariffs. So one, you might have less international travel to the U.S. I think the sentiment is soured a bit. You also will have, economic damage in the form of will just be reduced trade from tariffs. That if you put barriers to trade up, then less trade is going to occur. So there's going to be damage to both sides of the economies. It also adds to inflation or inflationary pressure. So most of the research will say that these broad-based tariffs are going to they're going to eventually end up in higher prices to the consumer. Now, it's not necessarily an ongoing thing because the tariffs only take place, once, but it's sort of an expectations thing with inflation. If people are expecting that tariffs are going to be ratcheting up, that trade wars are going to escalate, and as they make future plans, they're going to start, whether it's wage contracts, whether it is, paying for future business outlays, whether it is even, planning future travel, they're going to start trying to anticipate additional tariffs and what those effects on prices might be. So those will start getting built into contracts, and that could potentially have longer lasting effects on inflation. And as we know, inflation has got a pretty negative effect on consumption and people's perceptions of how the economy is doing. And that certainly can translate into lower domestic demands for travel as well.
Yeah, and just to give people some context of the U.S. sort of short-term rental demand, about 11% and we've sort of analyzed, comes from international guests. And of that, a significant portion comes from Canada. So Canadian guests made up about 2.6% of total short-term rental demand in the U.S. Last year. And I was just looking at some data from OAG. They're a company that tracks sort of flight capacity and demand. And in March so far, they're seeing demand for from Canada into the U.S. down, flight demand down anywhere from 70 to 75% as we look into spring and summer travel. So clearly seeing that sort of decline in bookings. We're, I think, a little bit too early to see it show up in the actualized demand. Maybe we'll start to see it in the March data when it sort of gets finalized, something I know we'll be paying close attention to. But 2.5% demand potentially down and 50, 70%, like that could have a significant impact for an industry where demand growth is only growing anywhere, and 3 to 4% expected for the year, right?
Right. So, you can turn a positive situation into a negative one pretty quickly. So, your friend and mine, Jamie Zhang, our Toronto resident analyst, she pulled some interesting data too, just from the news, of several flight routes from Canada to the U.S. have actually been canceled. So destinations from Arizona, Las Vegas, Florida, Nashville, and Phoenix. So in Fort Lauderdale, Hollywood. So, these are some tourist spots right there. These are, real leisure destinations, and actually having routes canceled by Air Canada and Flair Airlines. So, yeah, I mean, there's, it's, not definitive data as of yet. And I'm not expecting travel from Canada to go to zero, but it could be delicate.
And then the sort of other data point I pulled was around markets with most exposure to Canadian travelers. So if you're in a market like, and I think of it as like the border markets, Hawaii and Florida are the types of markets that are sort of most traveled to by Canadians. So with Buffalo and Niagara Falls being a big sort of Canadian market, 12% of demand last year came from Canadians. Bellingham, Washington, up near the border on the west side of the country, about 12%. The Maine beaches down South Maine, almost 10% of demand. Maui, already still really impacted by the fires that happened there, a year and a half ago. 9% of their demand last year came from Canadians. The Adirondacks in northern New York, almost 9%. And then you get down to Florida, Fort Lauderdale, about 8% of demand comes from Canadians, the sort of snowbirds coming down to Florida. So some really significant markets that are, I think, at risk, both in the spring, where March you see the highest share of Canadian travelers coming into the U.S. But even as you start to get into summer travel season, I suspect we'll see, if the tariffs are still in place, and maybe even if they're not, that a lot of Canadians could be maybe staying domestic and curtailing their travel into the States.
Sure. Yeah, that's a great point. And there may even be also some, travel diversion too from other locations, whether it's Asia or, sort of North or West Europe. Those places, after the U.S. are some of the top, locations or origination markets for Canada. And that might expand as well as other international guests sort of take a page from Canada, maybe travel less to the U.S. And again, there's two things right now. There's sort of this unfriendliness, I guess you might say, that some of these policies are bringing about, the tariffs, which are directly hurting foreign economies. But there also is the currency appreciation. The dollar was a little softer this last month, but it has definitely strengthened. So the U.S. has been an expensive location. Tariffs are not going to particularly help that, I don't think.
Yeah. So maybe starting to wrap up, we've got decrease in consumer sentiment. We see inflation expectations sort of increasing. We see sentiment around the economy start to deteriorate. But outside of the stock market, are there any sort of hard indicators that you've seen that are actually pulling us into negative territory? Or is it still just expectations that we could start to see deterioration in the economy, like jobs, CPI, GDP? At least in my mind, or at least what I've seen, is the hard numbers still holding up, but there's the expectation that maybe weakness could be coming. Is there anything real hard that you've seen that, like, you know what, Jamie, like, no, actually we are seeing the declines, or it's still just worry about potential weakness that could be happening because sentiment's deteriorating?
Yeah, well, to your point, I think all of the sort of big headline numbers are still pretty good. Inflation was actually pretty mild last month. For instance, there's kind of a double-edged, whenever you peel back, there's sort of nuance to it. Rent was still up, but energy was down, and that helped sort of drag down the inflation. And that sounds good. And we like low energy prices, but a lot of that was because futures markets are anticipating a global slowdown and thus lower demand for oil. So, looking at that, it's not quite as sanguine maybe as it appears on first glance, but nonetheless, it was still pretty mild inflation report. Unemployment is still around 4%, which is sturdy. One of the things that we have seen is declining labor force participation. So that had been it went down pretty dramatically during COVID. It had been on the mend, but it started to go back down again. Whether that's sort of an aging labor, market or labor force, and some people are sort of retiring out of that. And I think that already, I think we've got some success as far as Trump's initiatives to limit immigration. This could have later effects on that sort of labor force participation and just the size of the labor force in general. But that's still way down the line. We've still got lots of big immigration cohorts from the Biden administration that are going to be supplying our labor force for this year. So industrial production is still looking pretty good. Productivity is still having a pretty good time of it. So right now, it looks like the economy is functioning pretty well. But there's, again, this sort of uncertainty. And there's a lot of these, this is going to take effect later and have bad effects. And those keep sort of stacking up. And I think that makes people nervous, and rightfully so. So we'll definitely be paying attention to the metrics that are going to be coming out this month as far as inflation, employment. Pacing data for short-term rentals for this summer still looks pretty good. So we've got that. Whether there's going to be a big spike in cancellations, we'll see. But right now, everything is okay. Is this the calm before the storm? Perhaps.
Awesome. Well, calm before the storm, I think is a good way to end it. Forecasts for the economy still remain relatively robust, but a lot of potential headwinds out there. And I think all the more reason to stay on top of the data, stay on top of booking trends. So if you need to sort of adjust your strategy for the year, and you can. Is that what you'd suggest?
Yeah, absolutely. So I would say the baseline forecast is still looking pretty good. The risks might be to the downside, but we're going to keep paying attention and refining our outlook as more data comes in.
Awesome. Well, Bram, it's been a pleasure. Thanks for joining this week on the STR Data Lab.
Thanks for having me. Always a good time.